Gold traded in a very narrow zone yesterday. Most importantly, it has failed to break past 2035-40 zone. We discussed in our update, both the updates yesterday, why 2035, why 2040 is going to be critical resistance for gold. At the same time, beautifully, it has taken the support from 2018-2020, which were the support levels below which it could have gone for sale. And it has closed in green. So, what does this mean for gold? Can we expect a bounce back today, or is it again going to crash? Which position you should take in order to profit trading gold today? We will see with the help of charts and indicators. If you're not subscribed to the channel, do subscribe to the channel to get the latest This is the first update for the day. The next update will be released before the US session. Watch that as well. And if you appreciate the effort, please press the like button, which is a great motivation for me. Do comment, do share as well. Let's start. Now, see, look at the behavior of gold. You will find it is getting support on the downside. Higher lows are consistently created here. Yes, it is trying to create higher lows with every candle, but at the same time, yes, it is trying to create the highs, but look at, there is lot much of pressure from the upside. Every candle trying to get the pressure from the upside is closing on a lower, creating lower highs here. This is important. This suggests that there is a resistance. There should be a force for gold to break on the upside, and then it will take the direction. Right now it is still consolidating. Stochastic rising, MACD is almost flat here, and I treat this as a retracement. After the drop, it is retracement. See the angle here, uh, vertical fall and a gradual rise suggests that it is still in a retracement zone. RSI is almost flat. Coming to the two, likewise on the 2-hour chart, similar observation here. Yes, 2020 indeed a greater support, and now it is trying to create a further higher support at 2024. But most importantly, yes, there is a resistance on the upside which it needs to break past by in order to confirm further rise. Now, another way to look at it is see the sharp drop, retracement, then lower lows, retracement, and it is creating lower highs, which suggests that there is a possibility of a breakdown. We have to be careful here as lower highs are getting created. Until and unless it breaks past 2035 2040 zone, we should not be treating this for a reversal. Stochastic is rising, MACD is again on a retracement mode, RSI is almost flat, trying to look a little bullish. Coming to 3-hour charts, most importantly, the 20 and 50 period moving average is crossed over here and are trading with divergence. This is a bearish sign. And yes, the 100 period moving average on the downside is giving it a little support. Also on the 3-hour chart, so far lower highs, higher lows are getting created. Let it break on the downside below 2020 for more bearishness and above 2036 for bullish confirmation here. Now, notice one point I have mentioned yesterday, that 2028 2032 is the resistance zone here. Beyond 32 it is going to hit 35 and then 40 levels. Yes, this is the maximum resistance zone. So today again this will come into picture. You can buy here at 2032, but then expect 2034, 2035 and 2040 as the strongest resistance. If you see it is staying above 2040, the bulls will take over. Stochastic is rising. The MACD has again crossed over here and it is trying to trade with little divergence. Look at the sharper fall on MACD. Look at the divergence here. It is trying to now retrace a little on the upside. RSI is also looking upwards. Coming to 4. Now look at 4-hour charts. Beautiful consolidation here, waiting for a break. And this breakout can be either which ways. Yes, one can buy here at 2032, wait for it to break past 2035. Same observation what we have discussed. Now only thing is you can note that rise retracement, lower lows retracement, and it can create further lows here. Be watchful. Stochastic is flat. MACD is still trading with divergence and bearishness. It has converged a bit, but it has not yet crossed over. Remember, this is not still the lows which it can achieve. There could be further lows which it can move towards. See the highs here are at plus 15. The lows here are still at minus 5. So it can continue to diverge here on the downside. RSI has come out of the overbought zone. Coming to the now look at the daily chart. See lower highs here. We have to wait for a breakout on the upside. Yes, any move about 2035 2040 zone, again and again I am repeating, such that you can imbibe this levels and should be cautious of these levels. On the downside, below 2024 we can initiate a selling position, but with a caution note that 2018 2022 zone is the first support zone. Below 2018 is where we can expect gold to trade bearish, where one can look forward to 2015 2010 and then in fact 2000 levels here. Yes, if it stays below 2010, the bears will be active there. Also, if you notice what is it is trying to do, it is trying to take the support from the 20 period moving average. Look at the divergence among the moving average, too much here. 1960 to 2020, $60 of divergence. We have to be careful here. Stochastic has come to oversold levels with just couple of red candles. MACD, this is important. The MACD is crossing over here and it is still divergent. This suggests that there are bears out there. I have shown this in my previous analysis multiple times. Look at this. It is almost at the peak. Twin peak is done. Whenever you see double top, possibility of a reversal exists. RSI coming out of the overbought zone here. So now we have seen the charts, we have seen the indicators. Time for me to give you the trading levels and strategy for the day. And before I provide you the trading levels and strategy, if you want to learn this art of trading, you can join my mentorship batch. The 28th batch is announced. You can be part of it. Register yourself now itself. Reach out to me for more details. My Telegram and email IDs are mentioned in the channel and video description. Also, you can be part of my signals channel where trading as per the signals you can benefit. And yes, this Sunday, we have a free webinar where we are going to discuss what to expect from the markets in the coming week, which is an important and critical week as there is FOMC ahead. So which position you should take, everything we're going to discuss with the help of charts and indicators there, and much more to it. I will add on much more to it. So yes, do not miss to join this free webinar. The link is mentioned in the communities tab. You can just click on the link, fill in the details and register for the webinar. For signals channel, reach out to me via Telegram or email. Now, see, on the buy side, I will recommend you to buy today 2032 levels with a caution note that 2035 and 2040 is the strongest resistance. Beyond 2040, we can see extreme bullishness here. We have to be watchful. Yes, it can break out because see, first bullish candle, first greener candle, and if it gives a breakout on the upside, certainly it could bring more bullish momentum, taking it till towards 2052 and plus levels. But right now, it has further scope. It is taking the support from the 20 period, and if it breaks below this, first is even because the 20 period moving average sitting at around 2018 levels, you can sell at 2024 and be aware, be cautious in the zone between 2018 2022. Below 2018 is where we can see the bears taking over the charge, and we can look forward to 2014, 2010, 2004 and 2000 levels. Yes, 2000 is the milestone which it would like to achieve, and below 2000 is where further fall will be seen. Take your positions accordingly. Like, share, subscribe and comment. Wait and watch the next update before the US session. That is also equally important. And yes, join my mentorship batch, join my signals channel, and do not miss to join the webinar series. Thank you very much. Have a great profitable trading day ahead. See you again before the US session.